Hello everyone, welcome back. Today we're going to talk about gold, recent moves, outlook, risks and opportunities. Gold is back in the spotlight. It's trading near record highs, supported by shifting interest rate expectations, inflation dynamics, and ongoing geopolitical tensions. In this video, we'll break down why gold has moved higher recently, what could happen in the short term, what the long-term outlook looks like, and the main risks and opportunities for investors. Let's start with the recent move. Gold has surged in recent weeks with prices holding close to all-time highs. There are a few main drivers. First, softer US inflation data has reinforced the view that the Federal Reserve could cut interest rates in the months ahead. Lower interest rates reduce the yield advantage of bonds and cash, which makes gold more attractive. Second, the US dollar has weakened, and since gold is priced in dollars, that makes it cheaper for buyers and other currencies. And third, geopolitical tensions, whether in Eastern Europe, the Middle East, or in global trade disputes, continue to fuel safe haven demand. Together, these factors have created a supportive backdrop for gold. Looking at the short-term outlook, over the next 3 to 6 months, there are both bullish and bearish forces at play. On the bullish side, the expectation of Federal Reserve rate cuts is a clear positive. If the Fed moves toward easier monetary policy, real yields are likely to fall, supporting gold. Continued geopolitical uncertainty will also help sustain safe haven demand. On the other hand, there are risks. If inflation surprises on the upside, the Fed could delay or even scale back expected rate cuts, which would weigh on gold. A sharp rebound in the US dollar could also put pressure on prices. In the short term, traders should expect volatility with each inflation print and Fed meeting moving the market. Now let's take a step back and think about the long term, the next 1 to 3 years. Central banks, particularly in China, India, and other emerging markets, have been steadily increasing their gold reserves. That structural demand creates a floor under the market. Long-term, gold is also a hedge against fiat currency debasement, especially in a world of rising government debt and persistent fiscal deficits. If we enter a period of stagflation or prolonged low growth with sticky inflation, gold could be one of the best performing assets. For long-term investors, gold continues to offer diversification benefits and portfolio stability regardless of short-term swings. Of course, there are risks. A stronger than expected economic recovery could push real yields higher, which would hurt gold. Rising real interest rates raise the opportunity cost of holding a non-yielding asset. If the US dollar strengthens significantly, that would also pressure prices. And if geopolitical risks ease, if we move into a period of stability and growth, the safe haven premium in gold could fade. Another factor is speculative positioning. When too many traders crowd into gold, it can lead to sharp corrections. So where are the opportunities? For investors, there are a few ways to approach gold. The simplest way is through exchange-traded funds, which track the gold price and are highly liquid. Another route is through gold mining stocks, which tend to provide leveraged exposure to gold's moves, but come with added business and operational risks. And then, of course, there is physical bullion, which appeals to those who see gold as a true store of value. In terms of strategy, short-term traders will want to watch every inflation release and every Fed statement closely. Long-term investors might instead consider maintaining a steady allocation to gold, perhaps 5 to 10% of a portfolio, as a hedge against uncertainty. To wrap up, gold remains one of the most important barometers of fear, policy, and currency trends. With prices close to record highs and central banks signaling shifts in monetary policy, the next moves could be decisive. Whether you're a trader looking for volatility or a long-term investor seeking stability, understanding the risks and opportunities in gold can make all the difference.